If you're looking to amass your fortune, you've got to be prepared. And the best way to prepare for the trading week ahead is by watching the Equity Empire Chart Analysis session every Sunday. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at the chart on digital health and wellness provider HIMS and HERS Health. Before we take a look at the chart, let's go look at a couple major news announcements the company has issued in the last month and a half. The first of which, HIMS and HERS teamed up with Novo Nordisk to expand access to Novo's weight loss drug Wegovy. The second news announcement, in early May, HIMS and HERS announced revenues of $586 million, and that was up 111% over the prior year. They also announced 38% subscriber growth, and they now have 2.4 million subscribers. Now, interestingly, the company also provided a long-term financial forecast, a 2030 forecast of revenues of at least $6.5 billion and adjusted EBITDA of at least $1.3 billion. Now, 2030 is a long time away, and a lot could happen between now and then, so it's very difficult to forecast with any true degree of precision what sales and profits might be by 2030. But what we can do is we can take a look at the chart for clues as to what the big money is planning to do. What has their millions of dollars of spending on research on HIMS and HERS Health? What has that found, and what are their intentions? So when we take a look at today's chart, folks, you'll notice that there's a new indicator on the chart that I haven't used in my past sessions. And that blue line right there is the 21-day exponential moving average. What that means is over the last 21 trading days, in this case, HIMS and HERS has been heading higher, and the exponential part of exponential moving average means it places greater emphasis on the most recent price action. Okay? The reason I put that on today's chart is a lot of traders look for a bounce off the 21-day exponential moving average, and I've seen that happen frequently. But I've also seen this happen where it hits the 21-day exponential moving average and goes right through it. So I don't use that indicator by itself, but I did want to use it in today's session because it can be an advantage if it happens to coincide with a support level. And that's the case right here because there is a good looking support level in the 52 to 49 price range. So you have both a bounce off the 21-day exponential moving average and also a bounce off that good looking support level. And that gives me greater conviction that that support level will continue to hold. Now, before we construct a trade or a trade setup, let's go look for a resistance level. And there is a resistance level right here in the 65 to 73-ish price range. Okay, so our game plan would be this. We would be looking for a bounce off of that level and a back to retest the resistance level. So we would place a buy limit order in the 52 price range, protective stop just below the 49 price range, drag your target just in front of the resistance level, and this particular trade setup would have about a 3.7 to 1 reward to risk ratio. In other words, for every $100 worth of risk you would take in that trade, you could potentially have a reward potential of nearly $370. So the way this trade will play out ideally would be something like this. You get a pullback to the 52 price range, retest that level once again, bounce off that level and head higher, and then go retest the resistance level once again. If price drops below our protective stop, and that protective stop once again is somewhere in the 48, somewhere below 49.06. If we drop below there, we'll have a small loss. If price goes to the resistance level without pulling back, we won't get filled, but we won't lose anything. So those are the three possible scenarios here. Once again, this is the way pros set up their trades. Set up a trade with a bounce off the 21-day exponential moving average that happens to coincide in the same price range of a good-looking support level. Okay, so let's wrap up today's session, folks. Hope you enjoyed the session. I'll be back each day this week for more chart analysis. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.